SBA loans are by far the most attainable source of capital for you to buy a business. Now, these are loans that you can obtain from a bank or another type of lender that are backed by the government agency, the Small Business Administration. Now, what's great about these loans is they require much lower down payment requirements than a traditional real estate or a traditional bank loan. So to buy a business, you only need 10% down, but there's one great catch, is that all of that can come from the seller in the form of either a seller note, as long as it's on standby, meaning no payments or interest for at least 24 months, or the seller rolls some of their equity into the business. So essentially, they're making that 10% down payment using their equity. Now, SBA rules do allow for 0% to come from you, the buyer, but in reality, most banks don't allow that. The only time where you can get 0% down is if you're an employee or general manager buying out your own company. If you have really good industry experience, you're 24 months or greater within the industry, you can qualify for 2.5% down in most instances. And then in every other instance, still only have to put down 5%. Down payment doesn't have to come strictly from cash out of your bank account. Obviously, that's one source. A few other sources are just HELOC. You're allowed to use your home equity loan to fund your down payment. You can use your retirement account through a ROB structure, or you can get a group of investors to come in and make that down payment, which is a lot easier to do than you think because the returns for the investors are really strong. There's lots of people that want to invest in these types of things. Now, the interest rate usually catches people off guard at how high it is. It is a variable interest rate. It's based off the Wall Street Journal prime rate, typically plus between 2.5% and 3%. Today, most deals are getting done at about 11.25%. Now, the loans are 10-year loans. You can pay down the principal early, but there are some prepayment rules. You can only repay about 20% of the loan per year in excess of what the typical pay down would be without having to pay some sort of prepayment penalty. It starts at 3% and then goes down to 0, but it's still worth paying it off early if you can, of course, to not pay the 11.25%. Then when you need a loan, most of the big name banks are not very good at SBA lending. We see a lot of the most well-known brands ask people for 20, 25% down payments for the same deal that we've done with 2.5%. They really like to serve larger, much bigger companies. The big banks don't like to service small business. They say they do, but at the end of the day, they typically don't do a very good job at it. Really, your best source for SBA loans are probably going to be banks or lenders that you've never heard of before, and that's because they primarily just specialize in SBA loans for business acquisition. Now, as far as searching, there isn't really a pre-qualification. You can get some lenders that will give you a letter that says you're pre-qualified for a loan, but it doesn't really mean much. Ultimately, it's the business that is going to be the borrower. So whether a bank is going to do a deal or not, it depends much more on the business you're buying than you specifically. But that said, there are some brokers and some sellers that just don't understand the market and they will ask for a pre-approval letter. Typically, you'll get a bank that will do it. We can even write one that just says that we believe you'd be pre-approved for a loan. They don't really mean anything, but the people that are asking for it obviously don't understand that it doesn't mean anything. Now, for you, the main criteria, it's going to be your credit score needs to be higher than 680. If your credit score is below 680, everything else about the deal has to be absolutely perfect. Your work experience has to perfectly fit into that business. That business has to generate a lot of cash flow well above the level of debt payments that's required, even higher than it would be for someone that has a credit score above 680. So you can make up for a lower credit score and really any aspect of the deal by having strengths in other areas. So if anything about the loan doesn't necessarily meet the criteria, but it's strong everywhere else, sometimes you can still get that through. So when it's time to get a loan, you're going to need to come with the business that you want to buy. You're going to come with your down payment. You're going to need to show proof that that down payment wasn't borrowed. I think a HELOC is borrowing money, but the bank doesn't. So that's the only instance where you're allowed to borrow your down payment. In any other instance, you have to prove that it was not. If someone is giving it to you, they're going to have to give you a gift letter that essentially says this is a gift, not a loan, that there's no expectation for it to be paid back. You're going to need a really strong business plan with highly detailed projections. You're going to need to know the business you're buying inside and out. You're going to need the last 3 years business tax returns. You're going to need your own personal tax returns. You need to file your taxes. If you don't file your taxes, you can't take out an SBA loan. And you're going to also need a balance sheet and a list of assets for the business. Now, if you do get rejected, that happens. Sometimes it just might not be right for that particular bank. Really depending on the reason, sometimes you just keep calling until you get a bank to say yes. We've had deals that we've gone through 7 or 8 lenders before we got an ultimate yes. And some of it just doesn't fit their credit box. So each bank has, what they're looking for. And just because it doesn't fit exactly what their niche is, doesn't mean it's a bad deal. but you should still kind of consider why they're saying no. Look into it, take a hard look at it, and decide if you want to continue to pursue the deal. Now, if you need help, let us know. We have a complimentary service to help guide you through the loan process for loans $2 million and up. So if you have any questions about SBA loans, leave it in the comments. We always try to answer every question that comes through.